I get the excitement over some of the things the administration is doing, and I'm supportive of some of it. I don't think, let me say this. I think the problem is too far. I think we're too far gone. If we see the markets indicating that there's true failure in the financial system, they've only got one tool, Natalie. The tool is the printer, and they're going to just run it hot. And so whether it's ZERP or, maybe they take it to 3 or 4%, who knows? But we know they have to create more monetary units mathematically, or else the thing collapses. We had a big print in 2008. We had a bigger print in 2020. There will be another big print.
Renowned sound money advocate and portfolio manager Lawrence Lepard has long warned of an impending global financial crisis. According to Lepard, we are witnessing the final stages of the fiat monetary system, which is collapsing from within due to decades of reckless spending and unsustainable debt accumulation. In response to this crisis, Lepard predicts that central banks will unleash an unprecedented wave of money printing, far exceeding what was seen during the Great Financial Crisis and the COVID-19 pandemic. He explores these ideas in his latest book, The Big Print: What Happened to America and How Sound Money Will Fix It, where he examines the devastating effects of inflation and fiat currency devaluation on the U.S. economy. He argues that the only viable solution is a return to sound monetary principles, emphasizing assets like gold and Bitcoin as safeguards against financial instability. In a recent interview with Natalie Brunell, Lepard acknowledged some efforts by the Trump administration to address government spending but stressed that the scale of intervention required is far beyond what any politician is willing to take on. Given this reality, he asserts that the only foreseeable outcome is another massive round of money printing. However, due to decades of unchecked borrowing and fiscal mismanagement, this big print will dwarf all previous Federal Reserve interventions, including the trillions spent during past crises. Stay tuned as we bring you key insights from Lepard's discussion with Natalie Brunell.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I try to avoid politics of all stripes, okay? Because I don't want to offend anyone in Camp Red or Camp Blue. I tend to lean a little more towards red, particularly with respect to Bitcoin. But having said all of that, I think what's going on here is, and I'm very supportive of Doge. The government's got a lot of fat in it. I think what Elon and Vivek originally were trying to do, to a degree, it's a worthwhile thing. However, let's be practical about what can be done. If you look at the federal government, they spent $6.75 trillion in last fiscal year. 80% of that is Social Security, Medicare, interest, and defense. So 20%, $1.3 trillion is all they could go after, and they can't cut it all, obviously. And, the deficit run rate right now is about 2.4 trillion. So, unless you want to reform the entitlements or end all the wars and take defense and the defense footprint back a lot, or you want to get interest rates down lower, which they may have to do. They may have to go to yield curve control to bring interest rates down. I don't see how you balance the budget. I mean, so while I get the excitement over some of the things the administration is doing, and I'm supportive of some of it, I don't think let me say this. I think the problem is too far. I think we're too far gone. I really do. And so the book describes all the various paths, and none of us know with certainty what's going to happen. But, the general conclusion of the book, the reason I titled it The Big Print, is we're in a system that's constructed so that you have to print money to keep the debt burden from collapsing. This is Lynn's "Nothing Stops This Train" meme. And, we had a big print in 2008. We had a bigger print in 2020. There will be another big print. And so, in my opinion, as I said in the book, I feel like I want to stand on a soapbox and scream at the world. We're in a sovereign debt crisis, folks. You've got to protect yourselves from the oncoming inflation because there's going to be more of it.
Can't we keep this going on and have many more prints?
Yes, possibly. But two things about that. One, yes, but they will be inflationary. So you want to be in things that can protect you from inflation because there will be more prints, and they may hold the whole system together. I mean, to be totally honest and fair, I thought it was all over in 08. And of course they've kicked it at 16 years from 08. So it could be 16 years from now, but I think you can see the trend and where it's going. I think one of the things that's notable is that the prints are getting somewhat closer together and larger and faster in magnitude. Bernanke printed 3 trillion in 2.5, 3 years. Powell printed 5 trillion in 18 months. Money supply went up 40% in 2 years. I mean, so you're a working person. You've worked your entire life. You've tried to do the right thing and save your money. And they come along and they devalue all of your years of work by 40% in 2 years. I mean, it's tragic. And so the math, as you see, anyone who plays around with compound functions knows that eventually when you compound something enough, it starts to go vertical.
Mm-hmm.
And that's what's kind of going on with the U.S. interest expense right now, if you look at the chart of the U.S. interest expense. So it kind of feels to me like we're getting to the point where it is definitely going to break. There's another thing in the book that I think is very helpful. There's a chart by Hirschhorn Capital where he shows last 100 years, 11 instances of countries that have gotten to 130% debt to GDP. In every single case, they had a currency event, either very high inflation, hyperinflation, or collapse.
Yeah.
And so we're at about 125% GDP. So it kind of feels imminent to me. Now, by imminent, I would say I think this whole thing gets resolved by 2030. So 6 years isn't imminent, but it's, I invest with a 1 to 5 year time frame. So it feels to me like it's coming soon.
Lepard believes the current monetary system is broken due to excessive money printing, rising government debt, and fiat currency devaluation. To counter these issues, he advocates for hard assets like gold and Bitcoin. Gold has historically been a trusted store of value due to its scarcity, durability, and universal acceptance. Unlike fiat currency, it cannot be created at will, making it resistant to inflation and government manipulation. During economic crises, investors often turn to gold as a safe haven, as it has preserved wealth for centuries. Bitcoin, however, takes sound money principles even further. It offers the same scarcity and resistance to inflation as gold but with added benefits: portability, divisibility, and decentralization. With a fixed supply of 21 million coins, Bitcoin cannot be inflated like fiat money. Its decentralized nature ensures that no single entity, including governments, can control it. This independence makes Bitcoin a powerful alternative in a financial system where central banks frequently intervene for their own interest. As trust in traditional finance weakens, Lepard argues that Bitcoin will play an increasingly vital role in wealth preservation. Unlike gold, which relies on physical storage and transportation, Bitcoin can be securely held and transferred digitally, making it a more efficient hedge against economic instability. With the financial landscape shifting, he sees Bitcoin emerging as a dominant asset for those looking to protect their wealth. Now, let's return to the interview.
In my opinion, we are in a sovereign debt crisis. We are at the cusp of the gradually turning into suddenly phase. And the two best data points to support that are that the U.S. Treasury bond used to be the base layer of the financial system for years. It was a safe place to put money. It wasn't going to get debased and you earned a yield, okay? Since 2020, in Treasury bond terms, gold is up 200%, Bitcoin is up 2,000%. That, to me, those are canaries sitting there keeling over in the coal mine that, we got a problem here. We got a serious problem. And so, but yes, I found it interesting that Besant got in there and he said, all the gold is definitely there. He had to have been read in on that. There's no guarantee. He doesn't know if that gold is there, and neither do we. Ron Paul told me he's pretty sure it's not. I don't know what Ron Paul knows, but it hasn't been audited since 1953. So and now Trump says he wants to go down there and check it out. I don't know. And by the way, it points out the difficulty with gold versus Bitcoin. And don't get me wrong, I'm a gold guy. I've always been a gold guy, still support gold, but you can't verify it, right? You don't have a blockchain. You can't see it. Mm-hmm. China says they've got 2,000 tons. I think they've got 20,000 tons. Yeah. Right? It's very hard to figure out where the gold is.
So do you think that we're going to go back to ZIRP, zero interest rate policy?
Yeah, well, I think they may have to. It comes down to how this unfolds and if something breaks. I think one pattern we have seen is that the Federal Reserve has two mandates, but really a third unspoken. The two Fed mandates, as in the 78 Act that they passed, are, manage towards full employment and price stability. And of course, they've come to define price stability as 2%, which is a lie. But for the sake of argument, that's what they're supposed to be doing. The third mandate that they've talked about a lot and acted on, but it's not written in the law, is what I call functioning financial markets. Mm-hmm. And so, and the math would suggest that you cannot grow GDP at 8% a year, grow debt at 8% a year and grow GDP at 4% a year without eventually that widened gap creating discomfort and a break in the financial markets. That's Hirschhorn's point of 130% debt to GDP. And so when that occurs, everything's off the table. There was a Powell pivot in 2019. Powell tried, when Powell first got into office, he actually tried to tighten. He wanted to go back to a smaller balance sheet. And, the bond market threw up on it and said, no way. And he had to pivot, right? And then COVID came along and there was a crisis there and they pivoted again. And in 2008, they pivoted. if we see the markets indicating that there's true failure in the financial system, they've only got one tool, Natalie. The tool is the printer, and they're going to just run it hot. And so whether it's ZERP or, maybe they take it to 3 or 4%, who knows? But we know they have to create more monetary units mathematically, or else the thing collapses.
Lepard warns that we are entering a period of monetary crisis, where fiat currencies will lose value at an accelerating rate. In such an environment, he sees hard assets like gold and Bitcoin as vital tools for protecting one's financial future. While gold has stood the test of time, Bitcoin provides a modern, digital alternative that can thrive in today's rapidly advancing technological world. By holding these assets, investors can shield themselves from the risks of currency devaluation and the eventual collapse of the current financial system. As the global financial system faces increasing instability, securing wealth with sound money has never been more important. Lepard's insights stress the urgency of preparing for the inevitable consequences of reckless monetary policies. While central banks may try to delay the inevitable with aggressive money printing, history shows that such actions only lead to economic distortions, rising inflation, and declining purchasing power. Gold and Bitcoin stand as the last bastions of true financial security, gold with centuries of proven resilience and Bitcoin with its decentralized, technologically advanced nature. The choice is clear. Those who act now by diversifying into hard assets will be better positioned to navigate the turbulent economic future ahead. Do you think Bitcoin or gold is the better hedge against the coming crisis? We'd love to hear your thoughts. If you found this discussion valuable, please share your opinion. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now